Thanks everyone for joining us. As always, we end with our global liquidity monitor. This thing creates systematic trade ideas, a lot of up arrows. So it likes the global equities, it likes Brazilian equities, Canadian equities, Chinese equities, Eurozone equities, Indian equities, Japanese equities, and US equities. From a fundamental standpoint, it likes global bonds, Aussie bonds, Brazilian bonds, Chinese bonds, Eurozone bonds, German bonds, Japanese government bonds, UK gilts, and US treasuries. So there's a lot of good stuff happening. If you think about the interplay between growth, inflation, and policy, that's how the systematic trade ideas are generated. You can review the footer as always to understand more in terms of how those are generated. But there's a lot of good stuff going on. There's green shoots globally. It's very obvious green shoots globally. If you're paying attention, it's something we've been calling for since the beginning of the year. So that's something that's very positive for supporting the private sector functions of liquidity globally that are obviously creating this positive uptrend in global liquidity, which has been very supportive of asset markets, on top of all the positive dynamics that we have been explicitly calling for since late October in terms of U.S. liquidity. So we've gotten the markets right for the right reasons, and we have our antenna up very glued, because we're starting to see some upside capitulation amongst some of these prominent bears that suggest to us that a lot of the bull run that you guys have benefited from, based in part, at least because of our research, we're starting to see that they may take a breather in the coming weeks, in the coming months. But we don't necessarily think we're done with the longer term bull run. At some point we will be, probably sometime around mid-year. So that's kind of our general thesis. If that changes, we'll update you in real time. So thanks for reviewing. Catch you back here next week. Cheers.